Back. The bell is rung and stocks are mixed right now. We got JB McKenzie joining me here this morning, Managing Director of Futures and Forex at Charles Schwab, to talk some stocks with us. JB, and maybe a little futures and Forex too this morning. Good morning, JB. There's not much going on with the indexes quite yet. Haven't necessarily picked a direction. BTC is down about 1%. Dollar's up almost a third. That to me is a bit interesting here, as it's been range bound, but now inching towards the high end of that range.
Yeah, I think we've been talking the dollar for a little while here. I agree with you, Oliver. You're looking at the dollar. It seems to have a little momentum on the upside, but really sideways bound since it came off its highs a little over a month ago. We've been sort of sitting around trying to make a decision. Nobody really pushing down, pushing back up. But I think part of that is because in the U.S., you have a lot of questions. Rates, how fast the rate hikes are going to come from the Fed. I think people are waiting to see what comes out of the Fed minutes. You had a jobs number that came in a little light than expectations, but still strong, which seems like that's a green light for more interest rates and possibly a 50 basis point hike coming up. But then you go to Europe, a lot of weakness, a lot of concerns, a lot of questions. What does that do? That drives the euro down. What does that do to the dollar? It rises or pushes it up. So I think in some cases, the reason why you're seeing the sideways trade, but with a little bit of momentum to the upside, is because the weakness around the world is really what's helping to push the dollar up, while there's still some uncertainty here in the U.S. markets as we wait to see kind of more decisions that may come out of the Fed.
Okay. All right. This morning, the most exciting move is clearly Elon's 9% stake in Twitter after asking the crowd if there should be a new platform. He's currently dealing with some potential legal and SEC curiosity about his tweets. Unclear really where that's going to go, but in the past it's gotten him in a little bit of trouble. What do you think about this move, JB? Does it matter what someone worth $250 billion does with a couple billion?
I mean, think about this, right? It's less than 1% of his total net worth. He said, I'm going to diversify and go over to Twitter. I think it's interesting. So I think what's interesting is you look at Twitter, you heard Musk criticize a lot of this question of free speech and the ability to be able to communicate out there, like you said, threatening to start his own one like former President Trump did. But what's more interesting is he still uses Twitter as his main platform. So whether that is criticizing the government, President Biden and or the SEC, whether that is his announcements for questions that he may or make a decision to do on his own tax and his own personal wealth, to even then, whether he should start a social platform. So the fact of the matter is he is an interested user when it comes to Twitter. To me, what is interesting is you look at his history. He's not a person that buys distressed assets and lets them rally up and then sells them. So he's not like a Buffett or one of these other hedge funds.
Hey, we don't know.
He's a person who actually purchases something, attempts to fix it, and then starts to work from there. So I'm curious to see whether or not he really is interested in moving it forward, or just trying to have more say into how it actually functions.
Yeah, it's really unknown at this point, right? If he wants to be an activist, he's going to have to purchase some more, but I guess maybe not. Maybe this is enough to have some voting power. Again, $3 billion, what's he at? Almost 250, something like that now. So again, for him, there's not a lot of downside, it seems, but that doesn't mean we shouldn't respect the nominal amount. And clearly the market agrees with something here. By the way, Truth Social, DWAC, President Trump's social media platform, that stock's down about 11% this morning. Reuters also reported a few hours ago that a couple of their early entrepreneurs, including the chief technology and product development officers, left. So that's kind of interesting, too.
Yeah, I mean, look, I still think when you're looking at something like Twitter, the fundamental concerns and issues within Twitter are still there. And I think as you're an investor, this is where you have to watch the news, right? There's an excitement, there's momentum, there's questions that are coming out there. But just as you saw here with former President Trump's social media platform, when there are fundamental problems and people are leaving or you're not answering them, that stock is going to get hit hard. So while there's a whipsaw to the upside, The question is going to remain here is what can Twitter do in regards to its questions on, regulation and whether or not the people are whether it's real people or not real people, where there's the marketing, where is the usage, the daily average users, all of those questions still remain. It just happens to be they have one daily average user who's worth a lot of money and takes a lot of interest in it. So the influencer component is really strong right now and hitting hard when it comes to Twitter.
Okay. It was just last month that the SEC urged a federal judge not to let Elon escape an agreement requiring that his Twitter use be monitored. Maybe somebody's doing it. I don't know. Doesn't really seem like it, but who knows? I mean, I guess they might have a setup where somebody's just always approving, but that was in 2018 where they set that up, saying that Elon needed to meet a high burden that would go through Tesla lawyers to approve tweets. I mean, who knows what his process is right now and how this factors into that. But it seems like communication is going to be a very big subject now of his. All right, we'll see where it goes. The stock's obviously responding pretty well. Market overall is bouncing here in the NASDAQ, trying to get a little bit of a lift off. What about in Starbucks, JB? Another interesting CEO move. Howard Schultz back at the helm. And shares down 4% day one. Not a great start.
No, but you look at what he did right off the bat, right? He came in and his first day, he says, all right, my main object is I'm going to go around and listen to our baristas and listen to our people. And with that, he said, I'm going to suspend the buyback that was just pledged to in October by former CEO Kevin Johnson, and said, hey, no, we're going to stop that because we're going to take that money, instead of using a stock buyback, we're going to go push forward and look to reinvest within our overall stores, operations, and our people. So it's interesting. The concern here is that they're not using that excess cash to buy up the stock, which, as you know, a big issue. You heard from President Biden, you've heard from Senator Warren and other U.S. government officials complaining of the use of buybacks to push up stock prices. Yep. But here, to me, what's intriguing is he's using it to go and improve. And we know already that there's pressure on them from commodity pricing that we talked about being higher in those input costs. So the question ends up being is what can he do in taking that money and pushing it back into the stores? Again, he's only looking to be here through the fall. So it's one of those things where this could be a short-term item, but I think longer term, people are going to be looking and saying, what are we really trying to do when it comes to Starbucks? I think right now, this is a knee-jerk reaction to saying, hey, the stock's not going to get pushed up any higher. How are they going to get organic growth? And if you look at that stock price, I mean, it's taken quite a beating here over the last couple of months, really getting hit down here. I know it's bounced up, obviously, since Schultz has kind of come into the voice of being in here. We've seen a little pop, but really you're seeing a real push down, and input costs are only going up. How much are people willing to pay for that cup of coffee? I think is the big question that a lot of people are asking on the street, and demand's really going to be there. We're
back to below the Jan 2020 level in Starbucks because it did float upwards as one of the early restaurants to reopen and figure out a nice kind of hybrid model during the COVID pandemic. Emphasis on the food, too, that made it a staple. But then a market that's told us over the last 6 months it's not a staple, it's discretionary. Expensive lattes and sausage, egg, and cheeses, as good as those little things are, they do get maybe cut out of the budget if the prices are going up too much, as they have been. So I do think it's pretty interesting. Schultz, who earlier in his retirement had considered a Democratic run for the White House, the suspension of buybacks, to your point, certainly fits into a theme that Democrats have held, that these companies should be doing something better with their money. And honestly, I mean, the stock trades at $88, so now it's basically flat for 3 years. But under his tenure, Starbucks did really well. So taking the money from the buyback and putting it to use elsewhere, I kind of like it, to be honest. I mean, this thing went up, fivefold over the last decade. So buying back the shares at fairly elevated prices anyway, maybe not the smartest move, but the market just doesn't like that when a buyer leaves. But maybe what's bad for it short term will be good for it long term. Interesting move. Let's see how it plays out for them. JPM and Jamie Dimon. Also, it's like all CEOs this morning, JB. He warns of unprecedented risks. JP Morgan shares down about 80 bips right now. And it's been pretty surprising to see how poorly, in particular, JP Morgan stock has done over the last 6 months. it seems like we are selling off again right in line with the overall downtrend in this company for like 6 months.
Yeah, I mean, so first of all, you had it. I think Kev was talking about it a little bit earlier, right? The 43-page manifesto
Yeah, it's a
from
lot.
Diamond. I mean, that's more than a quick turner there.
He's kind of liking
to
these,
say the least. But he really was. Hey, sometimes you need something to get you going on a Monday morning. 43 pages can be it. But I mean, look, he really talked about three key factors coming up for the next decade as he talked about driving the markets. The first one is the response to COVID and the economy's pushing out there. And we're already seeing that drive everywhere where it seems to be pushing too hard. The second part was the other area we talked about, which is inflation. And really the impact of inflation going to be on the marketplace and how we handle it. And then the third was the war in Europe and with Ukraine and its impact. And I think it's interesting when you really start to read what he talked about 2% of GDP growth coming out of Europe just based upon the Ukraine-Russia conflict alone. He's talking about Russia being down 12% in GDP by midway through this year with the sanctions. So all of a sudden, there's a lot of headwinds out there, let alone what you're talking about in inflation. And so I think what you then saw here was this open question with the overall global market saying, wait a second, if these are the big concerns we have here, what are the exposure? And you heard in that paper as well, $1 billion in Russian assets still in play for JP Morgan. Not a huge amount, but not a small amount. But also remember, a lot of international markets, Europe, Asia, et cetera, also big on their balance sheet. So I think a lot of the weakness you're seeing in JP Morgan is that there is some potential concerns globally for their growth views, let alone the interest rates, while helpful, if things start to slow down, this is just a behemoth of a bank with all kinds of fingers all over the different areas globally. There may be more risk at play, which is really why I think you're seeing it kind of pull back a little bit. Unlike some of the other banks here in the U.S. that maybe still have a little bit less of the exposure internationally, like a Bank of America per se, that maybe has a little less of that. And now here, people are saying, wait, maybe JP is a little bit more concerned. And you start to see that. Wells Fargo cutting its price target down $5. More of them starting to look to say whether or not JP Morgan has a growth opportunity to have it, even with the rising interest rates.
All right, nicely done, Mr. McKenzie. Great stuff. Pleasure having you this morning. Thanks, JB. Good work. Mr. McKenzie is the managing director of Futures and Forex, and Charles Schwab,